Hey traders, TG Watkins here, and today I'm going to show you how to not get wrecked when certain stocks start to really turn over and start coming down. I thought this was going to be a very timely piece because based on today's date, today's October, late October, we have been seeing really good runs in the market and with some of these very speculative names, and then all of a sudden they turn tail and they start to implode. And for the most part, not too bad. This is kind of expected because they've been doing really great runs and they don't go up forever. However, if you got into them too late or at the top and thought they were going to keep going and then all of a sudden they go down 30, 40, 50%, yeah, you're going to get wrecked. So I'm going to show you in this video how I look at this, some tips and tricks will help you so that you don't buy up here, or if you do happen to buy late and they start to roll over, you know what to look for. And in fact, we actually started shorting numerous stocks this week, and I'll show you some of those trades here and how we actually gained and profited from those down moves. Okay, so here we go. I'll show you this. We're going to look at, this is going to be the number of tickers that we're going to be going through. And remember to hit the like and subscribe button and come over to simplertrading.com/moxie if you are interested in checking out more of what I do and how I run the room and actually these trades. So most of these things are real trades that we actually talk about. And as I said, we've been succeeding on the downside. So let's start with LEU. Part of this has to do with know your sector. Okay, if you're going to be trading a certain stock, you need to know what it does, what sector it is, because they travel in groups, right? I had a mentor once, they said they travel in packs and they bring their friends. So if you're going to be trading a nuclear stock, well, you might want to watch a few of them because they are going to move together. Even though one of them might look great, if another one's getting hit, because the whole sector is, then your stock is going to get hit too. LEU is related to that. It's uranium, it's nuclear, it's kind of in that same thing. And it has also gone up a lot. And so if we look at this, let me just start with this kind of close-up situation. The first thing is, this has been on an absolute tear for, over a month, okay? It's been a really good move. And while we love to see good moves, remember the stock market is a little bit counterintuitive. When it becomes obvious to everybody else is when it starts to come down, or when it's been too good is when it starts to come down. And so this has been a really good move. And at some point, it's just going to get overbought and people are going to look at the risk to reward and say, no, I'm not going to buy that. And so it starts to come down. Okay, people are going to start taking risk off the table. The other thing to note, and this is the benefit of the Moxie indicator, right there on the hourly chart is your hourly Moxie price trigger to the downside. Now, not always does the Moxie indicator mean you short it. Sometimes it means just get out long or don't be long or something like that because momentum has changed. But if you have the right context of the chart setup and you see this, which we had, that was a short. And so we actually put a short on here, right here that you can see the line, because there was a level, you can kind of see it was trying to do a double bottom. It broke that lower low. We entered this as of this video. Today is October 22nd. We actually shorted it yesterday and sold it, bought it back today for 18%. So we could have traded options. In fact, I know one subscriber in the Moxie room who couldn't short it because of whatever their account was. So he bought puts and he said he made 100% on the puts. Great. I made 18% on stock. Okay. There are multiple different ways to slice and dice this and take trades, but you can see just how great of a trade that was. Awesome. So we took that. It happened to be a one-day trade. Great. Thrilled with it. Now, also, if we back up, here's the other thing that I like to do is, again, I always talk about context. You need to know what the overall chart is doing, because if you're only looking at an hourly chart, that may not tell you the whole picture. If you're only looking at a daily chart, you're not going to get enough. You have to look at I believe that you need to look at all the time frames in order to get a sense of what's happening. And again, if you need to know your group, because you know that the uranium and the nuclear stocks have been just going up through the roof like crazy, and at some point they're going to become overbought. And you can see here that LEU on the weekly time frame started to pull away from its moving average. You see how there's a gap between price and the moving average? Obviously, this can sustain for a while. This is a weekly chart, but at some point it's going to become a problem. So if you're just aware of that, you can then start to use the lower time frames to help you figure out when this thing's going to top out. And you can just see this thing was just so crazy high. It was outside of all support. And that's why when we started to notice that this thing was coming down, you don't have to be the first one in. Just like you don't have to be the first one in to go long, you wait for the right setup. And when we zoom in on this, and you can see the first down move was basically right here. that's cool. Sure, maybe you can catch that, but you don't have to. I waited until we actually got a bounce up into the underside of the hourly 50 SMA, and it got rejected by it. And so then I took the easy shot where I knew it was getting rejected by these things. I knew that there was a lot of distance to the downside before any kind of support came in. And we shorted it, and you see how well it worked. It was also in market context. The market was being supportive to the downside. And then we got out because right here, you can see that there was some price support. And I just figured, this thing had a huge move in one day. Let's just take it. Just take it. You don't have to make the whole trade. You just need a trade. So that was LEU. And then GDX was another one. We actually shorted GDXU for the leverage, but you could do puts on this, or you could just short GDX, whatever, take your pick. Again, there are lots of different ways of doing this. Now, again, know the category of the stock. GDX is a gold miner, and we know the gold has just been, again, running up through the roof and on an absolute tear. It could be a little bit tricky to figure out exactly when this thing is going to come down. I'll show you what I did. But we know that this thing was just getting a little bit too crazy to the upside. And so if you're going to be long, you need to be careful. This thing may not want to go up too much further, and that's the whole point. How do you make sure that you don't get wrecked? You start to recognize that this stock, this ETF, this sector is getting really, really overbought. Now, that doesn't mean you have to get out right away, or that you can't trade it. You can trade it. Just make sure you start recognizing, get a little bit closer to the exit. Always keep 1 foot out the door, because if then something happens like this, you don't get wrecked. But you look at this on the weekly chart, and it's the same thing. Look at price pulling away from that weekly moving average. It was just in outer space. It jumped, and it was so far away from any support that at some point gravity is going to start acting on this thing and bringing it back down. And you can see that for now, it's even just come right back down to the moving average. Now, it might go further down. It might bounce. I don't care. I got my trade, and now I can just let it do what it wants to do because I got the easy thing. And so this is how you make sure, number one, that you don't get wrecked, and number two, you can take advantage of on that short side if you want. So for me, the Moxie indicator, as price continued to move higher, notice how the Moxie indicator continued to go lower and lower and lower. That is the negative divergence that I talk about and I teach using the Moxie indicator. So price kept going higher and higher and higher on less and less energy, which is what the Moxie indicator was showing me. Now, this was also when the whole market dipped down, and I did put a starter position on here, okay? And I was prepared that it might bounce a little bit. Now, in this case, it did bounce a lot. This was a pretty big move to the upside, but I was familiar with this. I've had experience. I knew this thing was getting a little bit too top heavy. And I knew that the Moxie indicator was basically coming from a dig. It was coming from a negative standpoint. So I was willing to hang on to this. I didn't have a huge size. I said, it's okay. Let me see how it works. And I only had to handle about 2 days worth of heat, because on the third day of heat, you can see that price actually came right back down. It came down with a vengeance. It really came down hard. And so that was another thing, context. I look at that and say, oh yeah, okay, I think this is about to start. So again, if you are long on a stock like this, you need to realize that it's getting frothy up there. You need to start kind of probably taking profits. You don't want to be chasing this to the long side, and you kind of need to have 1 foot towards the exit. And then when you start to see that it makes a new high and then gets handily rejected very, very hard, that might be your sign. That might be a little bit of indication that it doesn't want to be up there anymore, because a lot of people came in and sold it. And if you actually look at the volume, that was a big volume day. It was a big red volume day. That's another thing that's confirmation, hey, this thing probably doesn't want to go up anymore. And so what we did is we added to our short position right there, and then you can see it just got absolutely crunched the next day or two, and we made 27 and 33% on the leverage ETF of GDXU for shorting that. And now we're done. It was basically a 3-day trade, something on that one. So that worked out very, very well. RGTI, this is another one. This is the quantum computing stuff, okay? This is kind of the risky of the risky, because there's no revenue, and this is kind of new technology and, part of the AI and all this kind of futuristic stuff. And it hasn't really totally been proven, but it's a narrative and people are jumping all over it. That's awesome. We traded IonQ. We made over 300% on some options with it. I'm great. I don't have to trade all of them, but I was watching this and I thought, this thing's really getting up there. Once again, the way that you make sure that you don't get wrecked is to know that these things are getting extended by looking at higher time frames so that you have better context. And I could tell that RGTI, once again, was really starting to pull away from these moving averages on the weekly time frame. So, You can keep trading them to the upside, but just understand that when this thing stops going up, it's probably going to come down pretty hard. And just like GDX, look where it did. It came right back to the moving average. Now, it could go lower, could go higher. I don't know yet, but all I know is it was likely to come down from its very, very extended point. And so coming in through here, once again, look at the Moxie indicator right there. That was definitely telling you this was not the right time to be long anymore. So if you guys have been trading this to the long side and you start to see this thing kind of almost V-top, or it comes up, comes back down, Moxie indicator, you better be getting out, taking profits, going short, doing something so you don't get wrecked. Okay. And then you can even see here on the 15-minute time frame, you're following the moving average to the upside and you're following the moving average to the downside. And sometimes it's as simple as that. Okay, if this thing really has turned direction, you need to make sure that you get out so that your count survives and you're okay, and basically take a profit and make sure you've really, really de-risked, because you can see these things will come down in an absolute hurry. From the top down to here, I mean, that's like 40%. That's 40% down from the top. That's very uncomfortable if you're going to be in on something like this. Okay, so there's RGTI, and then QS. Same kind of deal. It's not a quantum stock. I think it's a battery stock. And once again, it's kind of in that risk on sector. And once again, look at the gap here between price and the moving average. And look how price was just getting very, very extended on these time frames. Great trade while it's going up, but understand it's getting extended, getting frothy, and it's going vertical. It is outrunning all of its support. You think about where price is up here. Where's the support? Well, the daily 50 is down here. I mean, that is an area of support. And you can see that last time it did the same thing. Run up, pull back, run up, pull back. And that's how you make sure you look at these things and just say, yeah, at some point it's kind of unreasonable to think that these things are going to go vertical like this. Just remember, the more they go parabolic, the more they outrun their support, and probably the more likely that they're going to come down hard onto I don't know, these moving averages and back down to prior price support. The other thing to look at here from the Moxie indicator is notice that price continued going higher, and each time that price went higher, the Moxie indicator went lower and lower. There was a negative divergence that was forming here, and it's the Moxie indicator that's trying to communicate to you that even though price goes higher, it's doing it on less and less energy, less and less momentum. And look exactly where the Moxie indicator fired to the downside. That is when you ran out of positive energy and momentum and it switched to negative. And you can see there was a little bit of a bounce, and then this thing got hammered. And I actually, on one of my accounts, I actually took a short trade right there. I think I made 17, let's see, from about there to there, 10, 11% is what I made on that one. Now, this one had earnings. This is also why I don't like to do earnings. Check this out. It's actually, amazingly, right back up on earnings. So again, whether you're long or short, I do not like earnings. I try to avoid them at all costs. Unless you have some cushion, I just really try to avoid earnings, because you just never know which way this thing's going to go. But anyway, that's how you could see that price was coming down. Use the Moxie indicator, understand when things are getting extended, and understand the sector that you're in, because basically all these risk on type names were really getting hit this week. Okay, SOXL. This is in the semiconductors. Now, the semiconductors are not necessarily risk on. They're actually pretty strong right now. Maybe they're getting a little bit overdone because they've just been the powerhouse of the market for lately. And if you look, this is the ETF of the semiconductor area. And so if you look at some of the big names that this comprises of, then you can actually start to figure out, okay, what's going to happen. NVIDIA is a big component. It has actually been coming down over the last few days. AMD, through the roof, unlikely to stay up there, probably going to start coming down. So both those names coming down are probably going to have a negative downside effect on something like SOXL. Once again, if you look either SOXL or you look at SMH, you could see that these things were also getting very extended on their weekly time frames. And if you drill down a little bit further, kind of the same thing what I've been showing you is that these tickers have gone basically straight up. More than 45 or 50 or 60 degrees up, and they just started to outrun their support. The other thing, and let me clean this up for a second. The other thing that I talk about, and this is where the Moxie indicator comes in, there were two signals here. Number one, you had price go higher and the Moxie indicator did not go higher. That is a form of negative divergence. And we called this. We actually shorted a few things and we were ready for the market when it came down like that. The other thing, and this was really the important one for this week, is here you see price back over the hourly 50. So you're thinking, oh, great, this is awesome. Price is over this moving average. It should keep going. It should follow that moving average. But notice how the Moxie indicator was below 0. That is a false long move. That's what I call an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0. And that was telling us that is probably not going to stay up there. In fact, I was communicating and posting and alerting my Moxie traders, hey, I think you should expect a pullback. And I think some people actually took advantage of this because you can see that this thing went from the previous high, double top, all the way back down here. And yeah, I know some of you guys actually took advantage of that, and that was all because of the Moxie indicator on the hourly chart. And then let's go to the last one, NBIS. I thought this one was also kind of another good example. This name has been on an absolute tear. Good, great job. Definitely propelled after earnings, and then I think they had some more news with AI and whatever out there. But once again, look at this weekly chart. Context, guys. You have to understand what the bigger picture is, because you can even see here's where price pulled away from the moving average. It kind of pulled back a little bit. Here's where price pulled away from the moving average. Pulled back a little bit. And here again is where price started to pull away from the moving average. And what did it do? Pulled back. Okay, it got too extended, too high up, outran its support, and was likely to start coming back down. And what you can see is in through here, another form of negative divergence on that hourly chart. Notice how price continued to go higher, higher, higher. Notice how the Moxie indicator tried to go higher, and then it actually started going lower and lower, lower, even though price kept going up. That is your negative divergence. That is the Moxie indicator trying to communicate to you and say, hey, even though price is going up, it's doing it on less and less energy. You better watch out. And once again, look at the perfect Moxie price trigger up at the top at the right time, trying to tell you, hey, energy and momentum is no longer positive. It has now switched negative. You better be careful so that you don't wreck your account, okay? Because you don't want to keep chasing this thing. And the fact that it went up so high means that it's got a lot of room that it could come right back down. You can see here, it came all the way back down to its daily 50, came back down to its previous price level. These things go up like rockets and they come down like rocks when that momentum comes out. And that is what the Moxie indicator is trying to show you, is that the momentum has just come out of this thing. And you can see it's broken the hourly 50 and then just goes straight down for several days. I don't know, 2 weeks or something like that. You can definitely profit from this on the downside if you want. But what I'm trying to make sure is that you guys see these things coming if you are long, so that you're not surprised, so that you don't get wrecked, your account doesn't get wrecked, and so that this isn't a surprise to you. So, in conclusion, if this is a surprise, if some of these tickers and things that I've shown you damaged you or your account, then come over to simplertrading.com/Moxie. We are running a special for the month of October about the indicator, about my classes, about the trading room, and we've been capitalizing on some of these down moves. And I've also been communicating to the subscribers, hey, be careful up here. It looks like these things are about to pull back. So if you're in these trades, start taking profits, start hedging them, go short, do something so that you aren't surprised. And so something like this happens to you, it's not that bad, or you've at least benefited from it. Okay. So yeah, just remember, simplertrading.com/Moxie. That's where you guys can find more information about me. And I hope this was useful and beneficial to you, because I know a lot of people were probably pulling their hair out today and this week and all that kind of stuff. And we were actually having a good time because we were succeeding from it. We were making money. Okay. I'll see you guys at the next one. Take care.